Happy Friday, Pat, and welcome from Chicago is where you're at, correct?
Yes, I am, all the way in Chi-Town.
And I'm sitting here with 3 minutes to go thinking, where is he? Where the hell is Pat? And you jump on and told me you ran 2 miles
To,
because you couldn't get a cab.
I could get a cab, so I ran 2 miles. That's how dedicated I am to our group here.
I'm telling you, yeah, it's good to be back. We haven't been able to really kind of punch out too many lives because of my connections and stuff. So it's good to have you, even though you got somewhere where you've got a decent connection. So fun stuff. So welcome. Well, welcome to our millions and millions of viewers. And like we say, we like to get on after 3 o'clock because we don't want to upset all the bandwidth. And when the kiddos are in school, of course, now we're giving them excuse not to log on and do their homework because we don't want them interfering with our bandwidth. So
Yeah.
we sound like we're caring, but sometimes we aren't. Vanilla Ice, happy Friday to you. And so, look, here's what I saw, Pat, and we've been seeing inklings of it, but you know how they track it by city. Look at all the red there. Chandler's CMI went down by 26% in 1 week, and everybody across the board went down except for Cave Creek and Tempe. It just blipped up at 2%. And the cities with most of the new construction, Buckeye, Goodyear, Maricopa, Queen Creek, they are now buyers markets. These up here, Chandler, Glendale, all the way down to just about Surprise, are still what's considered a seller's market. But if you look overall, in fact, let me read you their comment here for a second, Pat. They said, we can safely conclude that the market's becoming more favorable to buyers at an accelerating rate. Interesting. The average CMI change in these 17 cities over the last month was minus 7.8, more negative than last week when we measured 5.9%. Most negative again this week's Chandler. I don't know why they had a big dip. Well, we know why. It's rates down 26%, although it remains comfortably in first place. Goodyear and Gilbert are also much weaker than this time last month. So that's what's going on city by city. But take a look at overall the Cromford Market Index. It's definitely diving south. No doubt about it. And in a much faster, I mean, down here, I'm thinking, okay, well, it could go just about anywhere right here, right? As we were looking in June, July, and August. But there's no doubt where it's headed now. And that's a predictor of future sales and prices, somewhat of prices. That remains to be seen. And this is our pending listings right now. So this is pretty accurate. It's, if you look at close pricing, well, that reflects, last month or the month before, right? So, but pending listings for September 9th, it says here, they're kind of steady. So that takes me back to my chart, and it's showing that new listings, although they spiked up over Labor Day, have gone flat yet again, and new contracts are flat. And so if you were a betting man, I would say that I don't see the number of contracts on the 7-day moving average going much lower. Do you? I mean, forget holidays because you see September Day, Memorial Day, right? 4th of July. So I just don't see that getting much lower, even though rates have gone up.
Yeah, I agree. I mean, the rates, it's just been one of these, the last couple of weeks, it's just been really, you could see the comments on Facebook and different mortgage related comments about how slow things are, just overall, everything. It just, mulling around. It's been an interesting market. I mean, I heard a comment from one of our LOs had said, I know there's an article that says that they're calling it the silent depression.
Well, that's probably a good way to put it. But I think, now on the flip side, and I'm trying to get to that absorption rate here for just a moment. We have about a 2-month supply. What I look at on the absorption rate is when I look at the number of new contracts with number of new listings.
Yeah.
We're still at 74%.
Yeah.
So 74% of the new listings we see now are going under contract. That's that's healthy from a sales perspective. If you're, if you're thinking of listing, it's not like it was when rates first spiked up and all the iBuyers and investors panicked
Mm-hmm.
and inventory went up like 17,000 and 19,000. So that's when we got down to 65%. So
Yep.
right
Yep.
now, the gap between these two it's not really alarming yet. So
Yep.
I'm waiting for this number for whatever reason to go up, but it's going up. It was going up slightly just because of this dip in sales that we had. So it looks like
Mm-hmm.
both of these are going to maintain this sideways moment. And Dano here is asking, does Cromford report show multifamily constructions and permits? It does, but not every day. It's not something I can go look up. I wait for them to come out with a report, and then I
Yep.
share it. They're up. They're way up, especially multifamily. Construction has kind of flattened out a little bit. So, but looking at rates today, Pat, the past couple days, it certainly hasn't been great news. But when I look at this situation that we're in because of rates, I can't honestly sit here and say, "Oh no, this is terrible, this is bad," because it's it's to be expected. We
Yep.
are slow, and I I'd rather be talking about that now and sharing this than be coming on and going, well, we're back to the bidding wars.
Yeah. Yeah.
Rates are back down to 5. Here we go. Good time to sell. It's been hell for buyers for the past 2.5 years. Now, whether or not we're ever going to get to a balanced market where this is great for buyers remains to be seen, but I don't see anything that says that we're headed that way
I,
at
I
rocket speed.
No, I think the Federal Reserve. The longer we go out on this, I think the Federal Reserve has really locked a lot of. I think this going back into the rate lock theory. I think this is locked. This has really caused a lot of issues for a lot of people because you just don't have the velocity of homes that you had several years back. I mean, right now rates are 7.5, 7 5/8, right around there. I mean, with retail banks, I guarantee you the retail banks are probably sitting in the high sevens, low eights with some of these, right now I'm at 7.5. It was like basically 7.625. I was going to pull up a rate chart, but I didn't have time. But it has been frustrating. But once again, you look at the overall market. I believe, just this is going to be what I'm seeing developing here is that the rates, if they're sustained here, if you look at this chart right here, I mean, it just seems as though this is 7.5. These little levels right here, boy, I tell you, it'd be interesting to see if it broke above that. But I really, it just seems like we're at the top level of rates, and they're going to sit here. The fact that the Federal Reserve, they're kind of breaking step. As I've told you the last couple months, it just seems this theme now that we have. Back a year and a half ago, we have inflation. Inflation is still there. Oil and gas is causing a problem. But I think if we see that pull back, it's all oil and gas related. So my my story that I see developing is here. Rates stay around here, mid sevens through the year. And I think eventually, the first or second quarter, they're going to probably eventually have to loosen some. The Feds are not going to give up their story about letting up on rates yet. And they're still leaving that door open as far as raising rates, maybe one more time. If they do that, rates will probably start to go down because they know that they're really trying to fight inflation. But I think this inflation story is all built into the oil and energy story. It's sad that they don't get it.
Yeah, and I agree with Danilo here too. He says, I'm not an expert, but the Fed keeps raising rates to try and combat inflation, but the government keeps spending
Yeah,
money.
I
Yeah,
just
we've
I just
talked
had a
about on here a lot that, you got one hand pulling back and they're pulling back hard. When you look at
yeah,
their balance sheet, they're pulling back. And normally, Alan Greenspan would say,
did,
he would just come out and go, hey guys, Congress, quit spending money.
Danelle Ice has nailed it. I mean, if the government has no plans to reduce spending, and they can. That's the thing. The Federal Reserve, they can raise rates all they want, but you got rates rising, and you got oil and gas I mean, once again, if they do something there, it's going to be a watershed for inflation downward. And unfortunately, I just think these guys are just not understanding the whole story. It really is sickening in my book. You know,
Yeah, yeah. Who wants to buy a treasury and it gets even better next week?
well, that's the
It's
thing.
that
Yeah,
look at hindsight is everything. But remember, Mortgage Bankers Association said we'd be at 5.9 by the end of this fourth quarter. I don't see
yeah,
it.
yeah,
Many of our guests have said that we would be in the fives. I'm glad we're not because it would have heated things up. And I know that central bank and this is a shame that we have a system set up like this, but it's still the best system in the world. But this is a 4-week moving average of initial job claims, and it's down here to 217,000. They would like it to be up in the 300s. In
yeah,
other words, they would like to see more people losing their jobs is the
yeah.
bottom line.
I just don't understand that theory.
Yeah, it's a shame.
People lose their jobs, so inflation is going to go down. That's called a depression. It's not, a
Well,
deflation. And
yeah,
I
getting
just,
back to what you just said, Pat, look at this headline. The U.S. could be in a recession. We just don't know it yet.
geez, I'm ahead of this. I'm ahead of the curve.
Well, we won't know it until we see the numbers after
Well,
3
that's the
months,
thing.
right?
That's the thing. I think people, people are trying to predict. Once again, I mean, I guess we're trying to give information to the people who are trying to buy a home. You know, I just don't see things. I know it's not easy. It's not tough. It's painful right now. But if you are looking to buy a home, or sell a home, obviously you got tight supply. If you're looking to buy a home, it's not the best time. It's not going to be a cocktail party interest rate. They're going to talk about like, hey, I just got 7.5 or 7 5/8, based on 2.5.
Right.
But I think people try to time it right now. I think we're going to be in this for a sustained period of time, and once again, people are just waiting. It could be a long time, and just do what you need to do. But like we always talked about, buckle down, see what your budget is. It's not the low hanging fruit of buying a home is gone. It's not easy. It's just not easy. But
It
if you
it
want to
it
do it,
is good to you can actually schedule a showing and not
yeah,
worry about being there the first 2 hours.
yep.
2021, somebody would say, "Hey, Rick, I'd really like to see this house." Well, let me see if it's still available. And you call and they go, "Well, we have 5 offers now. We're going to review them tonight."
Well, see, and that's what you're going to have. That's what's going to happen when you've got rates are if they do start to plummet. That's the problem that I see happen. I really do see is you're going to see this rush of people. Say I can afford it. The problem is with rates being where they're at 7.5. You add in inflation that's added in probably $700 to $1,000 a month to the average family. I mean, their net loss in buying power per, like say on a monthly basis on a home, if you really stop and think, I'm just going to throw a number out there, is probably around $1,600 to $2,000. Would that be kind of a good guess? With interest rates, the payment increase and inflation.
Well, I don't want to be frugal to freak. I agree with you that we're all getting squeezed. So I think, and then there's the old saying, buy when there's blood in the streets. So, look, my phone, I get text messages every morning, at least 2. Um,
Mm-hmm.
People looking for distressed properties, investors, they're still digging.
Yeah.
And, I mean, if anybody out there knows of a home that you want to, you need to unload, and it could be your grandparents' home or something. These investors can get you cashed out in 7 days, and they are starving for these kind of properties. And
Yeah. Yeah.
they weren't finding very many during the peak of the season, and they're kind of hoping more of them will show up now. But I'm not seeing a lot of that. The
Yeah.
other thing that I'm seeing is more people waiting than I've ever seen
Yep.
before.
Yep.
Everybody has not given up. They've pulled back, probably rightly so, because there's so much uncertainty. It's like, well, I don't see rates hanging in here like this for another year. I don't see sales getting much better anytime soon. There's no harm in
Mm-hmm.
me in sitting on my hands. Now, new construction, whole different ballgame. They're still buying rates down. They're still offering incentives. And
Yep.
that's why those cities that we show, like Buckeye, Maricopa, and Queen Creek, are more of a buyer's market simply because of all the new building that's going out there. But you remember, Pat, every Friday we would see available listings pop up by 300 to 400 homes on a Friday, and then it
Yep.
would go back down 300 or 400 homes on a Tuesday. That movement now is usually less than 100
Yeah.
from Thursday to Friday. So we're not even getting that weekend surge that we used to experience.
Yep.
Let's get our house out there for the weekend. Here we go. We'd have 300 homes that would come on. And so that's not there right now. Maybe that was normal for a long time, and we just never noticed that. I mean, we have never been in this situation. So it's really hard to look and go, oh, yeah, you just pull back from injecting trillions into the economy and everything works out just fine.
Yeah. I just, once again, I think I'm starting to really realize that this is just we're in this, this is all a cause of a causal effect of COVID. And this is going to be going on for like this pain we might be churning out here for some time. And I think next year there's going to be obviously some movement in rates. But if people, once again, rates will come down. I don't see values. If the values might soften up, if sellers get desperate, they might start giving concessions. But I don't see values really dropping off drastically.
Well, I think our contract ratio, which right now, the way I track it, is at 74%. We know that when it gets to 65%, there's downward pricing pressure. We're not there yet. We might get there, but it's highly possible those two numbers just stay right there because going into November, sales will drop. But so do listings.
Yeah.
So they're both going to dip down together, and we're going to be looking at it going, well, they're both low and slow, but the prices are staying. I mean, people, while they're concerned, cautious, every once in a while, a bargain comes up and people grab it.
Yeah. I agree. It's like anything in the stock market, but no, it's been it's the same old, but you know what? Like I said, I'm seeing a lot of negative posts on the mortgage list, mortgage Facebook posts. The industry's they're grinding away. So I'm sure they're just waiting for rates to go down. Who knows when? I think they don't go up in a straight line and they don't come down in a straight line. I think we're going to be in this phase. We've been in this phase right now, this last year. I think maybe we'll start shifting eventually. Who knows when?
I think next year's going to be volatile, Pat. I think we're going to see ups and downs as they try to unwind this. It's going to, whenever in the early stages of a correction with constrained spending, like the Fed's trying to do, of pulling back, if we get a pullback in Congress and then inflation starts coming down, something else is going to move rather unexpectedly. So I think rates are going to, ding, 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 and see what's going on. Daniel here says, can you share the new listings and median sales price charts? I can show you here. Let me pull up here while we're amongst ourselves here. If we look at new listings, where do they have it? It's, I can always find this stuff until somebody tells me to find it, and then I can't. So by topic, list pricing. So we're looking at DeFrick. Thank you for the donation there. Can you share thoughts on new listings and sales price charts? There's pending listings. That's not what we're looking for. So I want new. I track them on my 7-day moving average. It shows up a little bit different. Here we are, folks. I'm going to go this month for a moment, and bear with me, guys. I got somebody knocking on my door. Come
on, Rick. Where are you?
So I was gone, and Pat didn't talk to any of you. See how that works?
Yeah, I know. You're running the whole thing. So I got stage fright. So Jeremy. Okay. Jeremy's bringing down the one. Hope you're ready for the Badgers to beat down in Purdue in 40 minutes. I like that. I like that feistiness.
You switched to football and paddle.
Talk. So all of a sudden I crop up. So.
Here we are in 2023, and this shows by day new listings. So and it compares it to the actual week, the actual month. So you can see we're down from last year, 3131, now to 2206. The median sales price has started to change which, sometimes it doesn't show you what you think it shows you. And one of
Mhm.
the reasons is, without me um, spending the time here trying to dig it up for you, the median sales price has gone up slightly because now in the luxury markets like Carefree and Paradise Valley, more listings have gone under contract. And
Yep.
so where they pretty much stay out of the party during the summer. So
Yep.
they're
Yep.
gone during the summer. So the median sales price dips. So when you get, it only takes a couple $2 million homes to throw that
Yep.
thing off a little bit. And we saw that last week. So the median sales price start going up. Price per square foot, however, is something that is a little bit closer. Here's median sales price. I did find it. See, when I don't have pressure, see how it's gone up and then it went down a little bit.
Yep.
And that's pretty much a seasonal decline in the summer because of what I just talked about, which is luxury listing. Now, if
Yeah.
I compare actual average sales price per square foot, and I'm going to say the long-term monthly average here, see what
Mhm.
this shows me. You can see that it went up, temporary little dip, and then it came up. So
Yep.
that's different than the median. So DeFreak here says jab hesitancy. There's just a lot of stuff going on out there. Right now, we got possibility of a government shutdown. You got the primary debates coming up. So nobody's going to get in a primary debate and say everything's great, everything's rosy. So it's just going to add to anxiety. And then when you look at rates going up, going down, and all of this other anxiety, it's just going to be a tough time. So you just, again, to what Pat said earlier, figure out what you need and where you're at, and then put a pencil to it and see if this is a good time for it. I got a link down below if you ever want to connect with anybody to find out, what your numbers really look like. We can do that for you. So
Yeah, and
yeah,
I think once again, I think that the best strat. I mean, there's not a lot of you can't escape the stupid interest rate environment right now. And bottom line is, I think that the best remedy right now that I see is a 2-1 buy down for somebody. If they can, if things do sell down where sellers can't sell, they're going to start. We saw that before about a year ago where they started giving seller concessions. And if they can get a seller concession for a 2-year buy down, I think that's really about the best remedy that I see right now. I just there's not a hell of a lot out there. I'm sorry. I
yeah,
wish there
yeah,
was, but
yeah.
I think people are looking for something that just like you said, it's confusing. You got the budget, you got inflation, you got you know what happened to the good old days where we just got up and just lived our life.
Well, we didn't have computers in. Running an
Yeah.
altitude says, do you think potential losses for investors, they will flood the market with inventory?
No.
No, no,
No.
not at all.
No.
Here's
As
why.
a matter of fact, I saw an article in the Wall Street Journal just yesterday that said that the Wall Street investors are having even a hard time buying stuff that is at a price point that makes it profitable for them. So, you know,
So they're having a hard time to purchase, but the ones that already purchased the majority of them at a good time. Their cash flow is good. That
yeah,
rent can drop 10%. The majority
yep,
of them will be more than fine. So
yep,
unless all of a sudden, in Congress's wisdom, they decide to make some radical change in capital gains taxes that incentivize investors to go, oh, okay, I don't need a 1031 exchange. Let me go ahead and sell these.
yep,
And I'll move into treasuries. That's not going to happen. They'll never
yep,
give up a tax.
yep,
If we really wanted to see more homes come on the market, give investors incentives to
yep,
move these without paying capital gains. Just give us
exactly,
a 1 year vacation,
exactly,
and I
exactly.
think some move. So, but they haven't called me and asked me my advice yet. So they probably call you first, Pat. But student
Well, I
loans
think
coming
we're
back online. There was an interesting thing I saw with Danielle DiMartino Booth, and Pat, I know you got to go in a couple
yeah,
minutes here. So,
yeah,
um, she said that when there was all this money that's owed at student loans, and they track the payments coming in, right? Well, when
mhm.
they announced that in October, the payments are going to have to be made. In
There's a
the
big
first
there's
part of September, they saw a huge spike in payments,
yeah,
huge, not just one payment, but a lot of money pumped into these student loans. Now, there's still a lot out there, but her point was that
yep,
money had to come from somewhere. So that somewhere might
yeah,
have been people that were
exactly.
saving to buy a house. And now they're like, well, screw it. I guess I'm just going to have to dump that to my
Yeah.
student loan. And that puts less buyers out there. I thought that was an
Yeah.
interesting stat. So,
Well, I don't see anything changing. I mean, everybody's waiting for some news to I think if you're looking to buy a house, I mean, obviously in the mid sevens, you're not going to see a lot of relief here short term. I mean, I guess right now, if you lock in at 7.5, 7.5 it's not a pretty rate, but just going with the assumption that hopefully the next 12 to 18 months, you'll be able to, refinance, in the lower rate. It's just not pretty right now. And to wait, I locked a couple people last week and rates are jumping around. There's not going to be any relief here short term to say, okay, now I'm ready to buy a house.
yeah, I don't see that happening really
I don't
quick.
see it, so just do it.
Danilo wants to know if we're going to organize another meetup. The short answer is yes. Danilo, what part of town would work best for you? We're trying to, that's the only thing we're trying to figure out.
We'll put a survey out.
Yeah. We want to do that.
Yep.
I'd like to do, but I don't have time between now and when we start getting the holiday rush, but I'd like to do a live event where we got our panel of Pat, the dynamic duo, and we do a live stream with a live audience. I mean, that'd be fun. So
that'd be fun. Yeah.
I'll get my techie sons, and my middle son is he's got a degree in music production, and he actually helped set up all of the LED screens for a Pink Floyd concert once. So he should be able to help me with the only thing give at this point is if is prices if rates stay high. Yeah. But I don't know.
And they'll soften up a little bit. So
yeah. So 5.47 million subscribers. You might need to run out the Cardinals.
All right, buddy.
All right. Hey, Pat.
I got to run.
Fun tonight, whatever the heck you're doing. And thanks for running 2 miles to be on the show. I will
thank you.
All right, go take a shower.
Have a good trip. Have a good week. We'll talk, everybody.
Okay.
Bye.